Okay, Tuesday, 10th of June, 2025. So Adrian's daily vlog, sharing smart stuff men should know. The hodlers of last resort, the Bitcoin hodlers of last resort, and future bear markets, or really the dynamics of future bear markets, we could say. So there's an interesting concept that I came across months ago, which is the hodlers of last resort. And that kind of ties in nicely with bear markets, surprise, surprise. Now, the principle to understand with any market, especially with Bitcoin really, that the lower the price goes, the more intense the buying becomes. Because the people that are buying at these low prices understand the first principles of the asset. They understand what they're getting themselves into. Money they can earn, money they can spend, apolitical, decentralized, fixed supply, and censorship resistant. Those usual nice buzzwords. I did a video about this, first principles of Bitcoin. So as the price goes lower in potential future bear markets, because the dynamics seems to have changed, certainly the intensity of buying has changed, but you could say the opposite is true. The intensity of selling and the intensity of over leveraging has increased as well. So there's both sides of the coin that we're considering, both sides of the Bitcoin we're considering. So the hodlers of last resort talks about how as lower the people who enter the market at the very, very end, when the market is totally tapped out, they're the buyers. The people who are going to be buying those coins, taking into self-custody, because they understand the long-term vision of Bitcoin, where it's going to go, what it is, the future behind it. Very nice. So it's price elasticity. Fundamentally, when we look at it from an economics point of view, it's price elasticity. And this is why when you go into shops, when it's a sale, there's more volume. There's higher volume, but maybe lower margin. So it's that. The lower the price goes, the stronger the demand becomes, and therefore the market bounces back. And the hodlers of last resort, like a play on words, the buyer of last resort, in terms of the banks, in terms of the central banks. So then you could say those people, the believers, the stronger believers, they're entering the market. Now, what does this mean for the future bear market as all these treasury companies are being established and all these public companies and private companies are buying into it? And I was looking into one recently, looking at the news, what it means as a precedent, some Bluebird mining company, in a British one in Korea. Now that's a precedent being made right there. They're mining gold, one inferior form of money, and buying another. That's fascinating in terms of market dynamics, in terms of what's happening in the world, the developments. So things are happening now. It's one thing worth considering and understanding is that with the stronger support there is for buying, that's if it's on stable ground, not over leveraged, for example, or managed well, that can also create a stronger buffer, a beta, we could say. In fact, the word really is beta, alpha and beta, with regards to stock performance. It creates a stronger beta for Bitcoin. If these companies, the ethos behind the buying is holding onto them for the long term, that's probably what's going to happen, especially if there's infrastructure in the wider market to facilitate extracting the liquidity of the coins without selling them. That's powerful. I talked about this in a video back on the 23rd of November. I think it was around that time. I'm pretty sure 23rd of November. That particular video. When I talked about how as the price goes higher, how do you convert this liquidity into bread, to food, into clothes, things like that. Oh, and one way, now it's become even more clearer, is use it as collateral. So depending on the diamond hands, essentially, of these companies, and the structure, margin calls and leverage, it's going to be hard to see a bear market in the future based on understanding the dynamics of markets, i.e. Supply and demand, price elasticity, hodlers of last resort, things like that. That's interesting. And then we can go even deeper. We look at these different charts, the logarithmic chart or realized price chart, and the hash rate. Hash rate is very important because that shows the direction. Well, it shows that the positive feedback loop, the Bitcoin flywheel, is in effect, along with the 200-day moving average. They're only going one way. always remember, when in doubt, zoom out. Any real decision on the chart, plans, whatever, when in doubt, zoom out. Just go onto the monthly chart, a yearly chart, 5-year chart, 10-year chart, max. When in doubt, zoom out. And again, in trading, the trend is your friend. The trend is your friend. What does that mean? Well, as you zoom out, the direction becomes even clearer. That's the positive feedback loop, in effect, the flywheel. And that means the price is only going one way. Oh, that's interesting direction. Okay, up there. Fair enough. So that means that the dips in the future will be probably shallower. Probably there's a case to be had, shallower or more severe, depending on, as I mentioned just now, these companies, the ethos behind the buying and their financial setup. Because to understand, just like what happened in November 2024, price skyrockets, parabolic, in a short space of time. That movement is unsupported. It can go down just as fast at a later date, which indeed is what happened, but not to the lows before in early November. I remember all this was playing out. And I remember the story another time anyway. But yes, that's the idea. Understand the market dynamics. Has the Bitcoin bear markets been, or will they be dampened? Have they become extinct, let's say? Bear markets truly will always exist. Boom and bust cycles. That's human nature for you. Malinvestments accrued. I talked about this in a video, the chaos point. All the bad decisions come back to haunt you. Malinvestments accrue when things are good, when money's cheap. They all come crashing down in their own way. House of Cards, The Big Short, things like that. They accrued. System flushes, destructive recovery. Oh no, that's computer science. In economics, it's called creative destruction. Getting rid of the bad things, out with the old, in with the new, basically. Out with the old, inefficient business models, tech, you name it, in with the new. Meaning, even in the bear market, the bear market is a mantra for you. The bear market is for builders. That's what they're for. They create the foundation and the new technology that is prevalent or headline, whatever, talked about a lot, trending in the bull market. The coders, the programmers who will be creating the next, let's say, layer 3s, layer 4s, or even the new circular economies in, say, El Salvador, they're right now not talked about. They're behind the scenes, building day in, day out, focused, or learning the code, things like that. They are the unsung heroes, and they won't be well known, 5-10 years from now. In like 2 or so halvenings? Wow. Exactly. Think like that, long term. It's very powerful. So these bear markets, fundamentally, we're going to start seeing different kinds of bear markets. And the hodlers of last resort are always going to be there. It's in the name, hodlers of last resort. The people who are buying in the depths of the bear market. I still remember fondly December 2022 bear market. Wow, that was an interesting time. I still remember it. And also, fundamentally, hodling, and little bonus little thing here, so to speak. Hodling is easy on paper. It's easy on paper, but hard in practice. Also, I've heard. I don't know. Where do I even get Bitcoin from? It's not around here. I don't know. Okay, but easy on paper, do nothing. Nice. How easy is that? Well, humans aren't. We fidget. That's what fidgeting is. Fidgeting is opposite of do nothing. Therefore, it's hard. But on paper, it's easy. And they're the ones. It's that quote, that Bible quote. The meek will inherit the earth. Interesting. Sounds a little bombastic, but the logic points to it. They're the ones that have the strongest asset, and they have the least incentive to sell because they understand it the most, meaning they have the biggest conviction. They understand it inside out, the tech, the philosophy, the first principles. That it feeds the conviction, and they say, right, it's that hodler's dilemma in a way. You got all this Bitcoin, and it's worth a lot of dollars and pounds and euros, but how do you turn that into, well, there's a train line here. How do you turn it into a train ticket? Turn it into clothes, turn it into bread, turn it into watches. How do you do that? Well, there's different ways around it, pros and cons, but that is interesting to consider. And the bear markets are going to probably have higher beta. They'll probably be shallower, because now the buying will be a lot more intense. Actually,